Top 10 asset classes for any portfolio. When it comes to building a robust investment portfolio, diversity is key. But with so many asset classes available, how do you know which ones are essential? In this article from Wythdrawl Investing Insights, we'll explore the top 10 asset classes that every investor should consider. From the familiar to the more complex realms, we'll break down what makes each asset class unique and why they deserve a place in your portfolio. But what's the ultimate secret to a well-balanced portfolio? Stick around for our big reveal at the end. Class 1, Real Estate, the foundation of wealth. Is real estate really the best performing asset class? Historically, real estate has been a top contender for long-term returns. It's not just about buying a house. Real estate investment can mean rental properties, commercial real estate, or real estate investment trusts, REITs. The pros are clear: potential for appreciation and income generation. However, it's not without its downsides. Real estate can be illiquid and comes with high transaction costs. Yet, its ability to generate passive income and hedge against inflation makes it a cornerstone in any diversified portfolio. Class 2, Stocks, the engine of expansion. Why are stocks a must-have? These equities, representing companies with high potential for expansion, have historically provided high returns. They're the driving force behind many successful portfolios, offering the chance for significant capital appreciation. The catch? They come with higher volatility and risk, especially during market downturns. But for investors looking for long-term growth and willing to weather market fluctuations, stocks are indispensable. Class 3, Dividend Stocks, steady income stream. What makes dividend stocks appealing? Unlike their growth-focused counterparts, dividend stocks provide a steady income stream through regular dividend payouts. They might not offer the explosive growth of growth stocks, but they're a more stable option, often sought after by income-focused investors. The downside is their lower growth potential, but the regular income could be a significant advantage, especially for retirees or those seeking a passive income stream. Class 4, Fixed Income Securities, the safe haven. Are bonds really safer than stocks? Fixed income securities like bonds are often seen as the safer side of investing. They provide regular income and are generally less volatile than stocks. This stability is a big plus for risk-averse investors or those nearing retirement. However, they're not without risks. Interest rates and inflation can affect bond values, but for balancing out the riskier parts of a portfolio, fixed income securities are a go-to choice. Class 5, Commodities, the inflation hedge. How do commodities fit into a portfolio? Commodities like gold, oil, and agricultural products are known for their low correlation with stocks, making them a good hedge against inflation and market downturns. They can be volatile and don't generate income, but their diversification benefits are undeniable. In times of economic uncertainty or high inflation, commodities can be a portfolio's best friend. Class 6, High-Yield Bonds, the risk-taker's choice. Why consider high-yield bonds? Also known as junk bonds, these offer higher yields than investment-grade bonds but come with higher risk of default. They're a way to gain higher income from bonds with potential for capital appreciation. However, they're not for the faint-hearted. The higher yield comes at the cost of higher credit risk and interest rate sensitivity. If you're enjoying this video, please pop that like button. Thanks, y'all. Class 7, Investment-Grade Credits, the middle ground. What's the appeal of investment-grade bonds? These bonds strike a balance between the safety of government bonds and the higher yields of high-yield bonds. They offer income generation and some potential for capital appreciation, but come with credit risk and interest rate risk. For investors looking for a middle ground in the bond market, investment-grade credits are a solid choice. Class 8, Inflation-Linked Bonds, the protector. How do inflation-linked bonds work? These bonds are designed to protect against inflation, as their interest payments and principal are adjusted based on inflation rates. They might offer lower returns in low inflation environments, but they provide a safeguard against the eroding effects of high inflation. For preserving purchasing power, inflation-linked bonds are a strategic addition to any portfolio. Class 9, Private Equity, the high-reward play. Why venture into private equity? Private equity involves investing in companies not listed on the public stock exchanges, often through funds. It's a chance to tap into potentially high returns with active management, aiming to significantly increase a company's value. The trade-offs? High investment minimums, illiquidity, and higher risk. But for those with the funds and the patience, private equity can be a game changer. Class 10, Hedge Funds, the diversifier. What role do hedge funds play? Hedge funds are all about active management and strategy diversity, aiming to provide high returns regardless of market conditions. They're known for their use of complex strategies, including leverage and derivatives. The downsides are high fees, illiquidity, and variable performance. But for investors looking for alternative strategies and low correlation diversification, hedge funds can be a valuable addition. So, what's the secret to a well-balanced portfolio? It's not just about picking the right asset classes, it's about understanding how each one fits into your overall investment strategy. The key is to balance risk and reward, aligning your portfolio with your financial goals, risk tolerance, and investment horizon. By incorporating a mix of these top 10 asset classes, you can create a portfolio that's not only diversified, but also tailored to your unique financial journey. Remember, this is not financial advice. Wythdrawl Investing Insights, signing off.